Everybody, welcome to exercise 24-3. This is Intermediate Accounting 17th edition. Textbook authors are Don Kiesa, Jerry Wangan, and Terry Warfield. The question used in this presentation is copyright 2019 by John Wiley and Sons. All rights are reserved. This is for educational purposes only. The video may not be distributed or be distributed without the express permission of Wiley. This solution presentation is copyright 2019 to 2022 by Bennett Tchaikovsky. All rights are reserved. The opinions contained within this presentation are those of Bennett Tchaikovsky and not the authors of the textbook or Wiley. Okay, let's go ahead and get to it. All right, so when we're looking at exercise 24-3, so this is talking about segment reporting. So what we're being asked to go through and do right over here is basically to say, which of the operating segments are reportable based on the revenue test, and also in terms of the operating profit or loss test, and then the identifiable assets test. The key portion right over here is 10%. And the reason why this is important is that if an operating segment exceeds 10% of either revenue, loss, or identifiable assets, that may necessitate the need for separate disclosure in the footnotes to the financial statements. So what you'll kind of see sometimes, for example, for Amazon Web Services, and let me just pause a moment. So this is Amazon, and this is from their quarterly report. I believe this is for March 31st, but they've organized their operations into 3 segments: North America, International, and Amazon Web Services. And so we allocate segments results of the operating expenses, fulfillment, technology, and content based on usage, which is reflected in the segment in which the costs are incurred. So right over here, so this is kind of telling you about their various different segments. And when you look at this in terms of their, right over here, they have North America, International, and right over here are their Amazon Web Services. And this is for 2022 versus 2021. But as you're going through and seeing this over here, is that these may not necessarily, hold on. Sorry, let me rephrase that. So this is how their segments look: International, North America, and Amazon Web Services. If, for example, though, within North America, Amazon Web Services has not been around. Well, it's now been around for a while, but Amazon's been around since '98, and this is a relatively newer phenomenon for Amazon relative to their normal operations. So what you could possibly find is that if there is a segment over in here within North America that gets really big from a percentage standpoint, that they may have to go through and start up there or basically break out a separate segment. And the other part of the reason why we want to show in segments is that this is really for the user. And if we are getting a significant portion of our revenue, or looking over here of like the operating loss, or if you have identifiable assets from a certain portion of the business, and then if that business is somehow discontinued or we're no longer doing it, then that's going to let the reader know how much they're relying upon a certain portion of their business. Now let me just pause real quick. And here we say this is eBay. This is a little bit of a earlier disclosure, but they have over here, they have one operating and reportable segment. And then over here, when you're looking at this though, but they are still breaking this down in terms of revenue from eBay Marketplace. And then this is over here is from StubHub. So again, and this is also showing over here by geography. So not only do you have segment information by revenue, but you're also going to have potentially, and again, this is just to really kind of go through and show to everybody that, say, if something happened in a particular country, that, what would those ramifications be if we were no longer able to do business in a certain country. So that's just kind of something to keep in the back of your minds as you're going through and looking at segment reporting. Okay, so now going back to our questions, so apologies for like the little break. So what we're going to go ahead and do is we're going to use the 10% test. So, right, so we're going to have operating segment. total revenue, operating profit or loss, and identifiable assets. Okay, let's go ahead and make this a little bit bigger. Go. Okay. So my operating segment, I have W, X, Y, and Z. My total revenue, 60,000, 10,000, 23,000, and 9,000. So if we were just to go through and look at this in terms of the revenue test, what we would say is, well, this is total revenue. And I would then take 0.1. So I would take 10,200. So 10% of total revenue, which is 10,200. So my reportable segments are going to be W, and this is going to be at 60,000, right? Why? Because 60 is greater than 10,200. Over here, X is not reportable. Why is it not reportable? And the reason why it is not going to be reportable is that 10 is less than 10.2, which is the minimum criteria. For Y, it's going to be reportable because for 23,000, this is going to be 23, it's going to be greater than 10.2. And then lastly, we have Z, not reportable because the 9,000 is less than 10.2. So those are the operating segments. That's how we deal with total revenue. Now, if we come over here to the next one, which is going to be operating profit or loss. Now, when it comes to operating profit or loss, we want to be a little bit more, the test is going to be a little bit, I don't want to call it funky, but when we're dealing with operating profit or loss, we are going, in the calculation of the 10%, we're going to exclude anyone that had a negative amount. So over here for W, they had a profit of 15,000. X had a profit of 3,000. We're going to exclude because loss of that 2,000. And then over here, we have 1,000. And so right over here, you've got 19,000. So again, we're going with the 10% of the total test. So this is going to be times 0.1 or 1,900. Now, in terms of whether or not this is going to be a reportable segment, when we look at each one of these over here, so reportable. Okay, let's go through and do the absolute obvious. So W, X, and Z. Z is not going to be reportable because 1,000 is less than the 1.9 threshold. Over here, for W, this is going to be reportable because at 15,000, and it's because 15 is greater than 1.9. For X, this 3,000 will be reportable because 3 is greater than 1.9. So those are the obvious ones. Now, when it comes over here to the not so obvious one, is when I look at this loss, I'm going to look at it in terms of an absolute value standpoint. This is going to be reportable, and it's because the 2,000 loss is greater than, or 2,000 loss on an absolute value basis is greater than 1.9. So when it comes to losses, we don't look at the fact that it has a negative number because it's not greater than, it's actually less than 1.9. But when it comes to this test in particular, when it becomes to reportability, I have to ignore the negative amount. I just basically assume it's an absolute value. So it's actually 2,000. Now, if the threshold was 2,900, then this would not be no longer applicable. Okay. So over here, and let's go ahead and now take a look at our operating departments again. Okay. Okay, so for the identifiable assets test, we had 167, 83, 21,000, and 19,000. So again, this is going to be a little bit more straightforward. So my 10% of total assets, our total identifiable assets, this is going to be 29,000. So when it comes to something being reportable, okay, so right over here, so my reportable segments over here, W will be reportable at 167. X will be reportable at 83,000. Both Y and Z are not going to be reportable under this standard, right? And so not reportable. And it's because the 21 is less than 29, the 19 is less than 21. And both here, the 167 is greater than the 29, the 83 is greater than the 29. So again, when we're thinking about segments, really think about it in terms of the investor, right? So if we have a significant amount of our assets in a particular area or region or whatever may have you, right? And even down over here, this is sales by online physical stores. So you can kind of see over here, their online slightly went down, no pandemic, but their physical stores went up slightly, third-party seller services. So you can kind of go through and see what's happening over here with Amazon. So it's very important just to kind of keep in mind is that our goal here in segment reporting is that if we have significant concentration in particular lines of business, that's going to be extremely important to an investor. And this is who we're going through and, doing our work for. So at least when it comes to public reporting. So I want to thank Wiley so much for allowing me to use their questions. Please don't forget to like and subscribe. If there's other solutions that you'd like to see, please feel free to ask for them in the comments. Have a great day.